All right, welcome back to the channel. As promised, we got a video on Amazon. Amazon's a company I really like. We all know it, we all use it. And in my opinion, this is a sleeping giant. So it's not the cheapest stock out there. It's in your face. Everyone sees it. Everyone knows it. In my opinion, they have so many different ways that they're just going to keep funneling cash into the business. So this is one that I personally have been buying more of. I've been buying more Amazon over some of the other companies that I really like, solely based on the technicals right now, and also their earnings just really made me have to take a double look at this and say, man, I don't own enough of this stock. It's not the cheapest thing in the world, but I think you're getting what you pay for. And I just really think they're kind of at the crossroads of a lot of different sectors that are just really going to keep exploding. So we've got the chart up here. You can see it's still below its all-time high. Its all-time high was 185, 190-ish. But it is in a nice uptrend right here. Again, it's not the cheapest thing in the world, but they really had phenomenal earnings. We look at their revenue, $134 billion in a quarter, and their guide for $141 billion. That's in 3 months. They're touching $141 billion in 3 months. That's a lot of cash. Now, that's not all profit. That's just how much money they're bringing in. They have to pay for their goods, pay for their employees, pay for their warehouses. There's a lot of costs that Amazon has. So let's get into the pros and cons real quick. So pros, Amazon Web Services. When people think Amazon, they think I'm going to buy Q-tips and it'll be here tomorrow. That's Amazon. That's not how they make money. They do not make money on giving you Q-tips overnight for 99 cents or whatever. They make money on other parts of their business. There's many businesses inside of the wrapper of Amazon. And AWS is the cloud services. You know AI, you know the chips, you know data center. All that is going to be fueled and ran on AWS, Microsoft Azure, Google Cloud, Oracle, all the cloud supporters. Everything that is done on the web, Zoom calls, all those things are supported by these big cloud companies. AWS. We've got the continued growth of e-commerce. That's not going anywhere. It's not as strong as it was in the pandemic, obviously, but that's not going anywhere. I live in California, so I'm sure you've seen the videos of people just running in and snagging stuff and running out. I don't know how they're going to solve that. All I know is you want to be long Amazon and Shopify because more people are just going to buy stuff online. More stores are going to close. All those things. So that's going to continue to grow, and Amazon has been there for a long time and been building, and they know the game, and they're going to just keep scaling and be better than most other companies. Prime Video. I find myself watching more stuff on Prime Video. I find myself when I buy something on Amazon saying, hey, do slower delivery, give me $3 credit on Prime Video so I can go buy a movie or whatever movie I rent next. It'll be cheap or free or whatever. Also, their partnership with the NFL. They're building a nice relationship with the NFL. Maybe Bezos buys this team above my head one day. But anyways, I think they're building a nice relationship there, and the NFL is a cash cow. Sports and entertainment is only going one direction, revenue going up. If you see what the folks in the Middle East are doing with their cash, they're putting that money into sports and entertainment. So I don't blame them. They see the trend. They know where things are going. Advertising, that's part of Prime Video, but also the online shopping. When you go on there and you say, I want Q-tips, show me Q-tips. Someone paid to put their Q-tips at the top of your search. Someone paid to send you this discount code or coupon or whatever. Someone paid to promote this product during Prime Day. Those types of things. Amazon gets paid to push some of those products. Shift to profitability. Amazon's been focused on growth, growth, growth. And they are starting to shift a little bit to become a little bit more lean, a little bit more profitable. Get rid of this business, pour more money into this business. Wherever they can reduce costs, they're starting to do that. Also, investing in the future. That is, those two kind of go together. They That's one of the parts with AWS is they were doing books online. They were doing the whole online store, and then they saw where things were going with the cloud, and they invested into that real early, and now it's paying off huge. And it's just that's their big growth driver is AWS. They're still doing that in other areas like the AI chips. So for their data centers and many other companies, they're spending money like crazy to build their infrastructure for the cloud. That's why Nvidia is booming and all the semis are booming because everyone needs to get their hands on these high quality chips. Amazon has been in the works of making their own AI data center chips, and so hopefully they can rely less on third party, kind of like how Apple makes their M1 chips now, and I think they're on M2, maybe even M3, but they're making their own chips and having to rely less on other companies, so that'll save them money. But also for Amazon, if they make a chip that's good enough, there's the possibility that other companies will say, hey, we want to buy your chips because NVIDIA is sold out, or your chips fit our process better. So that's another potential growth. We already went over the revenue, unbelievable. When we look at the cons here, it costs a lot to send the Q-tips overnight to my house. So the cost of sales, cost of doing business, all those warehouses, the logistics, they're going to go through booms and busts. Where when things are booming, they have to really dump a bunch of money, and then when things start to pull back, it's going to hurt there at the beginning of the pullback because then they got to pull back spend real quick, and then they're stuck with all these warehouses full of Q-tips that I'm not buying anymore. So there is that ebb and flow of the business that they're always going to have to deal with and ride the waves. We already talked about the lack of profitability. It's a con, but also there's a pro portion. The other side of that coin is pro. So two sides to that coin there. I feel like I'm stumbling on my words. It's been a long week or so. So bear with me here. Appreciate everyone for sticking through this video. The last one we'll talk about on the con is their valuation. It's not the cheapest. It's not the most expensive thing in the world. But I believe you're going to get what you pay for with this company. So let's take a look here. I thought I had a different graphic pulled up, but this shows just a little bit the different businesses that they have. So and where their revenue comes in. So we've got AWS down here, 20 billion. You've got advertising. They also own Twitch, which is like video game streaming platform. They own Audible. They own Whole Foods. They have a bunch of physical stores. When I was down in Seattle, you saw more Amazon stores than you did Walgreens. And then obviously their online store here. And you can see costs a lot. A lot of the revenue that comes in, more than half of it, has to pay to just run the business, which is fine. But over time, we're hoping to see this portion here get smaller and smaller and smaller. And hopefully the other portion also get bigger and bigger and bigger. One other thing here, again, investing in the future. In the pandemic, you heard about supply chain. We can't do this order. We can't send you this because we don't have it, or it's stuck on a boat or a ship or whatever. And at that time, Amazon was investing heavily in ports and planes, trains, and automobiles, whatever they need to get a Q-tip from one country to my house. They were doing that. But also, what they can do is if they have, let's say, space on an airplane, and some company needs to get their products from same country to same country, and Amazon can say, hey, we'll sell you space on this plane to put your products because we've got X amount of square footage free, and you need your product to get from A to B. we've got the cheapest and fastest solution for you. Here we go. More money. And then lastly, let's take a look here at the growth. I'm on Seeking Alpha here. Growth is good. 5-year average of 24% growth. Again, law of large numbers. It's hard to grow revenue at 25% when you're making 140 billion in a quarter. So currently, right now, year over year, they're at about 10% growth, which is still 10% for 140 billion. That's a lot of cash. And again, the only ding here that this website's given us, which take all this with a grain of salt, these are, just numbers that a website came up with, is the valuation with the D. But I believe that this is a sleeping giant. Give it time. They're going to keep growing. They're going to keep doing their thing. And this is one that I definitely want to have in my portfolio. I don't expect it to double overnight. Let's take a look. What is the market cap? 1.4 trillion. So again, these are dumb numbers, but this is the way my brain thinks of things. Amazon is 1.4 trillion is the total value of the company. Next quarter, they're going to be bringing in 141 billion in revenue, not profit, but revenue. So 1.4 trillion. We look at a company like Nvidia. Nvidia, great company, great business. Love them. It's all good. Their market cap is 1.1 trillion and their revenue is 11 billion. 1.1 trillion, 11 billion, or 1.4 trillion, 140 billion. Again, profitability way different. Nvidia keeps a lot of their cash. Amazon doesn't keep a lot of their cash right now. I have a feeling over time Amazon will keep more of the cash that they get. So that's the thesis here, is that they're going to keep raking in that cash and they're going to hold on to more of it instead of it going out to expenses and all these other different things. So that is the thesis on Amazon. Let me know what you think. I'm buying it. I like it. Like the business. I can't remember if I mentioned this at the beginning. So if this is a double dip, sorry about it. But Amazon, it's a little bit of an uptrend. I'm buying this over some of the other stocks like a PayPal and an Nvidia, which I do need to make not Nvidia, Enphase. I do need to make another video on those. Enphase, look at the yellow line, sloping down. Love the company, but it's in a downtrend. So I have limited funds. I'm going to wait for this to show a little bit of signs of curling up. Amazon, it's just much stronger on the technical side. There's fundamental analysis, which is the balance sheet, the business model, the CEO, all those things. In my opinion, that tells you what to buy. And then there's technical analysis, the charts, all those things. That tells you when to buy, in my opinion. So I love Enphase. I love PayPal for the long term. I just don't think there's a huge rush here. Because I could buy it here at 119, but what's stopping it from going to 100, 95, 85, 75? I'm just waiting for it to show a little bit more signs of flattening or rising. Because right now it's just a falling knife. So that's all I got for you guys. Hope you're having a great day. We got football tonight. We got Thursday Night Football on AWS or on Prime Video coming up. So check it out. That's all I got for you guys. Have a great weekend and peace out.